Hello and welcome to today's more important analysis videos on Monday the 30th of April with me, Richard Perry, market analyst at Hantec Markets. This dollar strength continues to run through the markets. It looked earlier today as though the dollar was struggling to gain a bit of a traction this morning, but it certainly, as the European trading session has sort of really kicked in, the markets have sort of moved forward in terms of dollar strength. But also that's been driven by sterling weakness. We had, it just never rains but it pours, does it? I mean, for sterling at the moment, you've got just a succession of negative headlines and factors pulling sterling weakness. And over the weekend, we had a resignation of the Home Secretary, Amber Rudd, which has affected the Brexit balance effectively. She's going to be replaced by Sajid Javid. And it sort of it takes out one of the key pro-Remainers, effectively, which is sort of a driving force behind a softer Brexit, out of the cabinet. And yeah, that's certainly impacting on sterling today, which is sort of 50 pips down on the day now. Euro also weakness as well, and that's all sort of continuing to have the dollar driving higher. And this is despite the fact that we've got treasury yields which are not really moving forward, as the 2-year and the 10-year don't really go anywhere, and the yield curve has not done a great deal today, but still the dollar is strong. You've also got, obviously, the improved sentiment from this North Korea, South Korea meeting of the two leaders there over the weekend. That's sort of generating positive headlines, and also risk appetite is helping to sort of pull equity markets higher. Also equity markets, certainly FTSE-wise, being driven by outperformance, considering the strength, or sorry, I should say the weakness of sterling. Now 50 pips down on the day, certainly helping FTSE to outperform. S&P 500 futures also up on the day. Again, that sort of feeds into this whole sort of risk positive aspect into the markets. So, in terms of where we're at in terms of data today, the core PCE is the big data point of the day, and that is this afternoon at 1:30, and expected to see core PCE jump to 1.9% from 1.6%. And that is interesting because, as you can see on this chart here, the core PCE, which is this yellow line, needs to start ticking up. And obviously you've got CPI on both headline and core above 2% now, and the core PCE up to 1.9%. If that were to be the scene, then that's just again sort of feeds into this whole inflation aspect in the States that is building. So my chart of the day is Euro Yen, which has been an interesting one because Euro Yen has been trending higher, but that candle on Thursday last week broke that uptrend in the recovery uptrend and really started to sort of put the pressure on the support once again. 132 figure, an old pivot, that is supportive, and it held, I suppose, effectively into the close on Friday, and it sort of remains holding this morning. But look at these momentum indicators. This is really the key factor of why I wanted to do this as my chart of the day. Look at those stochastics, sell signal confirmed, MACD lines crossing lower. And yeah, the RSI sort of in the 50s. If that starts to go below 50, that would suggest traction building to the downside. I'd say a close below 132 figure really does increase the pressure on a correction on euro dollar. That would open 131.15. You've got sort of three pivots really over the sort of medium to longer term, or medium term I should say, on this chart. 131.15, 132 and 133. All of these are key pivot areas. And a break of 132 opens 131.15 again. So yeah, the pressure is starting to grow to the downside. Today we've had a move above 132.40, which, if I zoom out all the way to March, actually was an old high, and it's now sort of taken on a bit of a role as a pivot in the last sort of couple of weeks ago. 132.55 was today's high before rolling over, so there is still sort of regard given to that sort of level. sort of considering the MACD lines, which are beginning to cross lower. The stochastics have crossed lower this morning as this rally has just sort of lost that impetus, lost that steam to the upside, and 132 figure I think is going to be the key factor that the markets will be looking out for now in a near-term basis. If that is broken, we're looking sort of further corrective move. 131.15 and possibly back towards that low at 128.95. So with these momentum indicators deteriorating now, we could start to see this market sort of coming under pressure. So with that in mind, I wish you good luck in your trading, and I will speak to you later.